Recording. So yeah, introducing the playbook. Looking at refinement 1.0. Right. Okay. All right. So we're going to list in our previous SOP. So our previous standard operating procedure, we were trading from base of levels to level. So we said that whenever price taps a level, usually an H4 or a daily level, the idea is to go 2 time frame below for confirmation. And our confirmation is either an engulfing or an engulfing fill that forms the price taps that level. So we usually trade on something like this. So let's say we have a daily level, right? Let's say this is a daily level. So let me write D, and then price taps that daily level. When price taps this daily level, the idea is to go to H1, right? Go to H1. Why? Because H1 is 2 time frame below the daily. So we'll transpose to 2 time frame lower. So on the H1, we are expecting two things. We are either expecting to trade off an engulfing fill, which can be something like this. Let's say we have an engulfing here, right? So we are either expecting price to break this previous engulfing and use it to continue price one. This is scenario one, right? Or we're expecting price to form a fresh engulfing on this level, right? Fresh engulfing. Scenario two, such that when price retraces to that engulfing, perhaps we are going to continue selling. So this is scenario two. So scenario three is we can get an engulfing buy on this level rather than an engulfing sell, which will signal that price wants to continue going higher. So these three scenarios, right? So these three scenarios are what we expect from our current standard operating procedure. So for an H4 level, if it was an H4 level, let's say H4, 2 time frame below the H4 is M30, right? So when price taps the H4 level, we expect three scenarios, right? The first scenario is that when we go to the M30 time frame, so M30, when we go to the M30 time frame, we are expecting price to break a previous engulfing. So we're expecting price to give us an engulfing fill. So this is the first scenario that we're expecting. So this is an engulfing that has formed before price taps. So price taps, price breaks the engulfing, price will return and continue to sell. So this is scenario one, like I said. For scenario two, we expect that price will form an engulfing, an M30 engulfing in that area, right? So after price taps the H4 level, M30 engulfing forms. What happens? Price taps and then continue to sell. Scenario three is that price forms an engulfing buy on that level. And what does that tell us? That's telling us that this H4 level is going to fail, right? So price would come, tap, and continue. So this is the standard operating procedure that we have, right? And there are some challenges with this standard operating procedures, right? And which is why sometimes we came up with the fact that when you hit a daily level, right? This is a daily level. And after you hit a daily level, you go to H1, right? From H1, regardless of whatever you see. So if you get an engulfing fill, um, if you get the first scenario, right? Price fills comes, what you do is you go to M5 to look for MSU. Okay. If you get the proper engulfing cell from the cell level, you still go to M5 and look for MSU for continuation. Okay. If you get an engulfing buy, the third scenario on that level for buy continuation, you look for MSUs also for buy continuation. So that was the refined way, right? And so those were the challenges we had with that standard, or what are the challenges rather that we had with that standard operating procedure? So with that standard operating procedure, sorry, okay, the first challenge was the fact that you get the messed up charts really, because you're marking a lot of H4 lines, a lot of daily levels, and then you're not sure of where exactly price want to react from. Okay, you're not sure of where you price want to react from, and that's becomes an headache, right? So the first challenge is that your chart is going to get messy. Too many lines. The H4 chart, too many lines. Daily charts, too many lines. So you're confused. What level is price really going to use? Is price going to use that level? Is price going to use this level? We want to be able to cut out all those confusion. So the second is the question of how long should I hold the trade? Okay. Um, Usually we say, okay, if you can get a 1 to 2 hour, 1 to 2 risk to reward trade, that's fantastic. That's very, very good. You're making 2%, risking 1% on your profile challenges. That's very good. That's perfect. But how about if you can know exactly the point where you should take profits? That means you want to be able to maximize your profits. We know losses are inevitable in the forex game, right? The market is a probabilistic market. Losses are inevitable. We cannot do without losses. Losses will come. So what we want to do is that the times where we make profits, we want to maximize those profits. Okay. So the problem with the standard operating procedure is that because of the proximities of these H4 levels, we want to build up H4 storyline, but the distance between H4 support and H4 resistance that's on the chart is probably like 10, 20 pips. So the person is saying, oh, if I get confirmation to sell from this H4, the next H4 is just close by. What do I do? Right? So overall, this is going to affect your trading edge. And this is the reason why we are talking about this refinement. So what's the solution? Now, the market is a all year round evolving arena, right? It's not as objective as you think. So if you take gold, for example, a lot of things affect the price of gold. Could be miners problem. Sometimes when there are miners problem in some African countries, you're going to see gold prices just start dropping, right? Or when some companies responsible for mining gold, when they get sued, or when something just happens, if they are big companies, something is going to happen to the price of gold. And sometimes if there is war, for example, if there's war, if there's a suicide bombing in countries that have high high that have a very high gold reserve, like Switzerland, United States, all of those big companies, Germany, they have very high gold reserve. China. So if there's war, if there's anything affecting war, even generally anywhere in the world, usually affect the price of goods. So when we have inflation and all of those things, and literally this also affects any kind of markets. Talk about the index futures market, stocks, the commodities market, and even forex. So all of these things, their prices get affected by macro supply and demand, the principles of macro supply and demand. So what we want to do as traders is we should check technical analysis. What we want to do is to be able to create a strategy that every time price behaves this particular way, there is a big chance that this is the next thing that will happen. Every time price taps a daily level and gives an H4 breakout, there's a big chance that the market is going to do so, and so. That is the reason for strategy. If the market was so objective, there is no need for strategy because the market is going to be doing the same thing over and over again. There's no need to create a strategy for something that repeats itself over and over again. Okay. For example, when you enter your room and put on your and put on your switch, your bulb comes on, right? That happens over and over again. It happens everywhere in the world. So when I come, do I need a strategy to put on my switch? No, I just need to put it on. Either I'm using the remote, I'm using a voice command, or I'm pressing my hand, pressing the button. The idea is that whenever I want to turn on the lights, I can turn it on. It's not like that with the markets. Things change. Okay. So an objective trading strategy is not a strategy that knows what price will do every time. No, that's not a strategy. That's not an objective. That's not why we say a strategy is objective. Because there is nothing that happens every time in the market. So your trading strategy might not be able to tell you what price will do every time. There's no one thing, no singular thing that happens all the time in the market. Okay, because if there's that singular thing that happens all the time in the market, everybody will be profitable. I mean, like, so how about MSU? Ah, no, bro. MSU does not happen every time. Okay, and that's why when MSU happens, we have an idea. Is either it happens for continuation or it happens towards reversal, and then we can build our story around why it's happening, where it's happening, and what we want to do. So nothing happens every time, and it's the reason why Mark Douglas is a renowned trading psychologist. He said trading is a game of probabilities. So when you're taking a trade, you're calculating your risk. You're not trading based off no risk, no stop loss, no nothing. And that becomes pure gambling. In fact, any trading strategy or any trading idea that comes to your mind that involves risking your whole capital is likely going to make you gamble. Okay, if it involves risking your whole capital, it's going to make you gamble, and it can backfire when you least expect. Really, when you are so confident that this trade is going to work out, those are the exact trades that will send you back to your village. So you have to assess your risk before every trade, and being able to do that actually gives you the idea, the ounce that you're a professional trader. Never doubt your setups. Either it's going to play out or not. You had planned it before market came to that area. And which is why in this module, we're not going to be talking about flipping. Nope. I currently strongly advise against it, right? So again, our focus is going to be prop firms. Now, prop firms have as the cons, they have their pros, but you have to save enough money to be able to buy at least three prop firms such that you're not attached to the money when you start trading them. Okay. So you have enough. Even if you fail this one, you still have enough to actually follow through. So it's usually very important. So we are going to aim more for an anticipatory approach to price action. We're going to aim more for precise entries, aim more for precise exits. Why do we have so many lines of the charts? Okay, why is there so a lot of lines on your chart? The solution is understanding strong levels and storyline. Okay, why are you unsure about your targets when you enter a trade? Again, the solution is to understand liquidity and storyline. So now let's get to the charts. Okay, so first of all, we go over today's price action. Let me see. Yes, let me share my screen. We go over to this price action and okay. So let's see what goes on from here. So what happened today really? What happened today? So we're going to be using everything I've mentioned, direction, storyline, and then structural liquidity. All right. So price started off, the opening of today's price was around this area, right? It was 1 a.m. in my time. I'm going to start from 12 a.m. my time. Sorry, guys. You're not Nigeria. This is GMT plus one. 12 a.m. GMT plus one. So market opens right here. And immediately market opens, one lesson you will learn in that in a bullish market, don't be too quick to sell. Okay, don't be too quick to sell. The common mentality, because that's what everybody in the world would want to do. Okay, gold has just taken an all-time high, a lot of orders resting above this high. So what would most people be doing after the close of the day? Okay, a lot of people want to sell, and that's why the sell pressure is why we had so much sluggishness around this area. You see, price was just ranging a little bit, just around there. Okay, because people wanted to sell so eagerly. But as a trader, I want to be cognizant of the important questions to ask. Number one question is, where are the strong areas that price can retrace to continue this buy? Okay. And then what is the market really telling me? What are the details the market is really telling me? All right. So let's see. Back to the H4. So you obviously want to start your charts from the H4. So on the H4, you at this level. On the H4, we have this imbalance that I mentioned. Cheeky candles, right? I mentioned them yesterday. We had cheeky candles. Okay. You have this cheeky candle. All right, so probably you're not awake through the night. But I'm not sure if you're in Asia, you're probably awake. So let's also talk about the Asian section. So back to the M30. So we see price comes all the way to this side. And what happened before that? I even showed my friend this trade in the midnight. Now see this right here. Continuation setup. Okay, what will price do in a bullish scenario? Price would always form new highs and then induce the lows, right? So take the high, take the low, buys continue. Okay, all right. Was there a reason to doubt that setup? No, there was no reason. The only question is that how long can you hold this trade for? So for a bullish market, for a market that has been trending for a long time, there's the idea of what we call a measured objective. So for example, this is what I mean by measured objective, because there's nothing up above. You don't, for example, Bitcoin keeps going all the way high, creating new all-time highs, all-time highs. So if you're going to buy and you want to probably take some profits and do dollar cost averaging, where are the places you want to take your profit from? You don't know. So a trader in the past came up with the idea of objective measurement, or what did I call it before? Objective, something objective. So what's that called? Now, if you have an expansion that is this wide, okay, and then you have a retracement. So price comes this way and then retrace this way. Measured objective means that price is likely going to go as high up as this using the previous expansion leg. That's the idea of measured objective. It means that from the correction of the last move, price is likely, there's a 50% chance that price is going to go this high. So if you're entering here, you take your measured objective, you're going to be targeting that high. So that's one way in a trending market when price is just creating all-time highs. Another way to determine your targets in a trending market when price is creating all-time highs is to use the Fib expansion. That's the Fibonacci to this one, the Fib trend expansion. So you just draw it above correction level. So you see is exactly the first point you want to take profit is just exactly this level. So one, that will be your first take profit, and then you can take profit as you go on. So the measured objective is very, very good. Okay. Now let's test this idea. Now let's see H4. We're actually going to go back to this price action. I just want to show you this quickly. Now see this H4 charts. I hope I'm not going too far. This is H4. Yeah, it is H4. Okay. Now let's see this buy, for example. Now this is the first leg of the buy. So this from here to here. All right. So our measured objective, you see, you're still going to get your profits. It happens most of the time. So that's why I said there's a big chance it's going to happen. Right. You can narrow it down whatever time frame you are. Just ensure you're measuring the right frame. For example, if you decide to start from here, let's see this was low, so the retracement started from here. So one, the next leg measured objective from the last retracement, two, right? So this cancelled out. We had this price fund came all the way to this high. Okay. So now if you take the measured objective of this full high up to this point, okay, you bring it to this level. What happens? So it's just you just keep getting the idea of where to take profit from, where to. I just thought to mention it's I don't know, it might be very useful depending on price behavior in the coming days. Okay, so let's get back to today's price action. So the buy, beautiful buy from this level. So how would I have entertained my targets? How would I have known at least the minimum place to take my targets from? Okay, again, we had this measured objective idea from that level, then from here, so you can take your profit off of this level. That's why we talked about the measured objective. Okay. So price again, if you did not enter at this level, price gave a breakout, came back to this engulfing field, M5 engulfing field, and then pushed all the way high. Okay. So in continuation for what happened. So I add other levels, important levels marked. And the question is, why did I mark these levels? Remember, I said, whenever you are coming to the charts, price has gone higher, price has gone down. The first question you want to ask yourself, where are the levels strong enough to continue price? Okay. And one of those levels, I marked this imbalance. And in between that imbalance, we have this gap level. So in this gap level, on H1, watch closely, we have this structural liquidity, right? This is the last low before this main low, okay? The last low before the main low. So we have the structural liquidity, okay? Price broke, 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 okay? Okay, so this was the last high. So price again takes the high this way, takes this high all the way, and then this is the low. Price takes the low, okay? So now the first step, watch please, guys, watch very well. So the first step was into this strong level. Price came first step, right? Taps into this level, bounced up, boom. But is price satisfied? No, price, this is descent 80 pips. Is price satisfied with this bounce? No, price is not satisfied. So what happens? Again, you're asking, is there any strong area within this level I'm trading with that is capable of rejecting price? Okay, yes, there is. What is that area? Just like we have our EFG setup, this is an engulfing field. This imbalance here is an engulfing field, and this is an engulfing. Is that strong enough to react price? Yes, it is. So you see rejection, price taps, start to sell. Now, at this point, where is the next place you're interested? You're interested in this last low before the main low. This is the last low before this main low. So what happens? Price comes, induce that last low before the main low, right? Following through, very interesting price action, okay? And then comes to make a new all-time high. Why is this new all-time high important? Now, you're going to remember what we mentioned about MSU when reversals want to happen. Okay, so another place to have entertained the buy continuations from was now this area has been used to sell price lower. Okay, so price came to that level, completely mitigate. Now, the next important area that price can sell from is this imbalance again. That's why I mentioned the idea of imbalance. See this imbalance, this one. Okay, so price taps that imbalance, comes back, taps the gap level, and then sold off. Where did it sell to? Not this level. Why? Price just simply taps this level, comes all the way to this classic SNR, and then sold again. What's that telling you? That's telling you that this area is not strong enough to make an all-time high. There are a lot of powers that be around this level that would not allow the buy from this level to break this high. So that's why the extreme, like I used to say, is very, very important. So what do you have in the extreme? So price takes liquidity, break structure. Okay, so price comes back to this engulfing, and what happens? You start to buy. Again, taps multiple times, taps, start to buy. We bought all this up to this point. And so why did we have the sudden sell? Again, good question. Now, what do you see here? Let me use the line chart to explain this better. What do you see here? Price takes the low, takes the high, your inducement high, broke structure. Takes the low, takes the high. Like I used to say, price would give you that entertaining MSU setup whenever it wants to reverse. And it did. See, first setup. Sorry, let me take everything off so it makes sense. So we have this high, this low. Okay, that's your MSU. This is an all-time high. Nobody knows if price is going to keep going higher. Okay, but what we know is that this is an MSU setup into an all-time high level, which is a potential place for reversal. So we have price induce the low, takes the high. What do you want to do here? You want to start selling. Why do you want to start selling? Because it's a good MSU. In fact, if you'd not taken this trade from here, this sell from here, a good place to have taken this trade is when you came back to this engulfing field. Why is that engulfing field important? You must ask yourself, is this strong enough to pull price? Is this level strong enough? So what makes a level strong enough is a level that takes liquidity or break structure, or it could even be an inverse MSU, which is the case in this scenario. Why? Because this was an MSU for buys here, right here. Okay, the price takes the high, takes the low. When we break out, price is going to come back to the exact same MSU level to continue lower. You see that? Price comes, taps that MSU level, and then the sales continue. Okay, so I could comfortably take the sell just around this area using my MSU, inverse MSU, because an MSU is a strong level. When price breaks it, it does not stop becoming a strong level. It's just going to be used to continue. So it was used as support to buy from here, to be used as resistance to sell from here. So that's the idea of what happened in this scenario. Okay, so let's look at another for today. Let's look at a random chart. Let me see if I can share my screen again. Let me see a random chart. Okay, let's see this chart. Now let's backtrack a bit. Let's see how far. Let's use the replay button. Let's use a price action I'm not familiar with. Let's see what year. Okay, let's see this. What do we have here? So what do we have here? Now, again, price just formed an all-time high on gold this year. What year? Sorry, my hand is barred. So we have this all-time high formed. Price comes to this extreme. Let's see what the weekly is like. Now I'm checking the weekly here because I don't know where to start from really. That's why I'm checking the weekly. Okay. So the weekly level, we had this rejection. Classic scenario, we had the rejection, and then price comes, we had rejection. After rejection, what do we need to confirm that rejection? You need H4 breakout. So weekly reject weekly. Sorry, you need daily breakouts. Don't mind me. One second. Sorry. Daily breakouts. These are daily breakouts. Okay. Now, after this daily breakout, what do we get? We have price taking the low, takes the low, and then you anticipate that price will take the high. Now, the next important question, where is the strongest level between this and this level, between this range that is strong enough to reject price? Now, looking at this, I can't say, honestly. Looking at this daily, I can't say. I can't really tell you that, oh, if this level is strong or this level is strong. So what do? I want to see clearly what's there. So let's go to the H4. So on the H4, oh, beautiful. Can you see what I can see on the H4? On the H4, you can see this MSU. So price takes the low, takes the high, okay? Breaks out. So what does that tell me? That's telling me that this MSU is a strong enough area for price to at least reject price. Okay, so let's see what happens next. What are my concerns here for this MSU setup? So price breaks. This area is all mitigated. So I think this area should be your structural liquidity. And then you can have this old guys, this guy here, as the level you're anticipating price to tap. Okay. Where else? Don't forget the extreme. Price can still decide to come to the extreme, so you not leave that out. So we take this imbalance candles up there. So let's see what price does off of this. So let's see H1. Let's see if we can enjoy this a little bit more. We're just trying to combine everything so far, so good. Okay, so off of this, we already know this is where we are coming to, right? This is our target, structural liquidity on and on. And then, so let's see the structure from this level. So we see price took the high, then took the low, then broke out. Okay, so what else do we have? So price took the high, did take the low, no, break, continue from this level. We have this, price takes the high, takes the low. So if price comes back here, I would probably entertain a buy. Okay, so let's see. Price comes back to this breakout level. I'll entertain a buy. This will be my target, right? Or this level. Okay, so let's see. Okay, came back. Pause, Mr. Man. Okay, came back. Can I buy here? I think I can. So I can buy off this level. That will be my stop. My stop is going to be below the engulfing field. This is the whole idea of the, oh, sorry, that was the wrong one. This is the whole engulfing field, okay? My stop is going to be below this guy because I also have an imbalance in this middle. You see, price came to that imbalance beautifully. See that? I should have even marked it before. Came to that imbalance beautifully. So let's say this is my entry from the imbalance level. My stop below the engulfing field. Where will be my target? My target is crystal clear. I'm targeting the H4 structural liquidity. Why? Because that's where price will continue from. Price will go from liquidity areas, go from strong levels to weak level. Now, am I anticipating that price will reject a little bit here? Yes, yes. So let's see what happens off of that level. Pause. So we get second entry. The price comes, does what it does best. See again, price takes the high right here, takes the low. Okay, takes the high, takes the low, but we are still preserved. Okay, so you can again entertain this buy after that inducement. All right, your stop below the MSU level. Again, your target remains the same. Okay, so let's see. Oh, pause, Mr. Man. Oh goodness. So yeah, we had this breakout or break of structure. Okay, so this formed. So let's see again. The price tap, no. So we have all these areas all mitigated. So you can expect price to come to these levels later. So this place for now would be your liquidity. So if price comes, you can continue. But obviously, this guy broke this structure. So price would probably do something like this and continue. So let's see what happens next. I'm trying to be able to beat time with this guy. Okay, pause. See that? Came into the level. Let's see if we take out this guy. If we don't take it out, there's no problem. Just look for another thing. Okay. Pause. What do you see here? Let's give breakouts. Came into the level, give us breakouts right here. So this level is it strong enough to reject price? It's a level that has taken liquidity and giving us a breakout. Okay. So I want to entertain another buy here, but I already have two positions running, so I want to be very careful. Okay, so let's see. Again, nice. What do you see here, guys? So price taps this level, good level. You can see, probably appreciate some rejection right now. So price taps those levels. Oh, 10 minutes more, okay? Tap that level. Again, where is strong enough to reject price? This area is strong enough to reject price. But again, don't forget that we have this guy, this low. This low, although it's strong enough, but it has worked. Price has mitigated it. Once mitigation, my price entertains 50%. The price has at least entertained 50% of that level, of that zone. So So there's nothing more here to tap. And at the same side, don't forget that we have this low for price to induce. Also, this is also the last low before this low, right? This is the last low before this main low. Why is this a main low now? Because this is the low that broke this high. So you can get something like this, or we get price coming to induce this, or we get price coming to induce this. So let's see what happens. Price would always induce something. So see, let's take the high right here. Let's see if we take the low. Pause, pause, pause. See that? Ooh, nice. So we see, came for this level, right? Grabbed it. Okay. In fact, give us an MSU into that level price. Takes the low, takes the high. MSU for sales into the level. What do I want to do? I'm not going to be scared. I'm going to enter right here. My stop is going to be below this guy. Okay. Low. And then where will be my target? I'm going to be targeting the same structural liquidity. So let's see. Let's see what happens next. Oh, nice. Nice. Sorry. Okay, pause. See, let's see. Price taps. Good. So price taps are level. Now see all the idea. See the way we have been able to narrate the story of price all around that level. All these levels, were they strong enough to reject? Yes, they rejected price, but price was continuing his story. See this level, rejected price right here. So what did price come to? Price came to another strong level. Where's the other strong level? See this one. This one took liquidity here, broke structure. So price reject here, came back, induced the high, tapped this level, and then sold to our final area where we wanted to mitigate. Why? Because this level was just so free. Price just boosted. So if you're entering here, your stop loss is not going to be here because you still have this imbalance area. Price can still decide to come to use this imbalance area. Okay. So that's why you have to put your stop loss below the low. Okay. So let's see what happens after price taps our area. I'd like to go to the H4. Okay, for this. So let's see H4 taps. Then we still have these levels also in case price blast all the way up. This level is also a strong level. Okay. You can see I'm using words that are probabilistic. I'm not using word oh pause. Goodness, that was so fast. Okay, so back to H1. To price taps, see the rejection, super fast rejection. Okay, now your idea is where is going to be my next target. Don't forget that we have daily reject daily. Price has taken the low, taking the high. So one of your first targets is going to be the last low that price took, which is this low, this one. First target. Your next target is going to be this guy. Why is this guy important? Because this is the last low before this main low in this setting. Again, your next target, if price can break this guy, this low becomes your next target because this low is now the last low before this next main low. Okay, so we have first target, second target, third target, and then we have final target, this MSU low. So price can decide to do anything. So let's see, let's go to M30, H4 to M30. Do we get an engulfing to confirm that level? Yes, we got an engulfing to confirm that level. The price taps into our engulfing. What else do you need? Okay, which level is strong enough to reject price? You see price, see this level, strong enough, right? The price taps, continues, but price did not mitigate the 50%. So I'm still going to see if price can come all the way up here. Okay, another thing is price didn't also mitigate this level. So let's see if we can get an MSU into any of these guys, I would entertain a sell. Okay. Let's see, pause, pause. So what do you see here? Price broke. Okay. Let's see if price is going to take the eye. Price takes the eye. I'm in. Pause. Goodness, that was so fast. So price comes, takes the eye, right? Gives us engulfing sell. So what do you want to do after engulfing sell? Only sell from here. What will be my first target? My first target will be this level. Okay. This is decent 5R, right? So let's see what happens next. Say price taps our entry. Ooh, takes us out. Goodness. Now I made a mistake. My stop should have been above this guy. Goodness. Should have been above the engulfing guys. Sorry. So takes us out, right? Stupid loss, right? Very stupid loss. And this is the kind of loss that's going to pain you a lot. Why? Because obviously you're in this kind of level. price is going to do something like this to induce guys out. Why? Because, oh God, I really fucked up. Why? Because price has not induced the 50% of that level, right? So it means that this high is still an available place for price come and mitigate. That's why it's just good to put your stop above this level. Now, see what did we get? We see price took the low, took the high, this, then finally took the low, comes to induce the high, and then the sales continue. So demand that understand liquidity can even still be the liquidity. See that? So you have to be very, very focused. So let's see. I think our time is almost up. But let's just see if this gets to our target. Sorry. All right, guys. So that's going to be all for now. We're going to continue tomorrow. I hope I've been able to introduce a little bit about the playbook to you and what we expect to see in the days coming on. So we've been able to sort the idea of drawing too many lines. Why? We are asking ourselves important questions now. Which level is strong enough to reject price? What's the storyline like? What's market really doing? Okay. Which one is strong enough to reject price? See that again and again. Price will always take the high, take the low, come to an important level to sell, and so off. Okay. Take the high, take the low, plan levels, and then price to sell off. All right, guys. Thanks for joining. Again, I'm going to catch you guys tomorrow.